Welcome back, champions. Another mind-boggling stock news. Bonds, also known as fixed income instruments, are used by governments or companies to raise money by borrowing from investors. Bonds are typically issued to raise funds for specific projects. In return, the bond issuer promises to pay back the investment with interest over a certain period of time. Here are a few tips on how to invest in bonds. Number 1. Know when bonds mature. The maturity date is the date when your investment will be repaid to you. Before you commit your funds, know how long your investment will be tied up in the bond. Number 2. Know the bond's rating. A bond's rating is an indication of how creditworthy it is. The lower the rating, the more risk there is that the bond will default, and you lose your investment. AAA is the highest rating, using the Standard & Poor's rating system. Any bond with a rating of C or below is considered a low-quality or junk bond and has the highest risk of default. Number 3. Investigate the bond issuer's track record. Knowing the background of a company can be helpful when deciding whether to invest in their bonds. Number 4. Understand your tolerance for risk. Bonds with a lower credit rating typically offer a higher yield to compensate for higher levels of risk. Think carefully about your risk tolerance and avoid investing solely based on yield. Number 5. Factor in macroeconomic risks. When interest rates rise, bonds lose value. Interest rate risk is the risk that rates will change before the bond reaches its maturity date. However, avoid trying to time the market. It's difficult to predict how interest rates will move. Instead, focus on your long-term investment objectives. Rising inflation also poses risks for bonds. Number 6. Support your broader investment objectives. Bonds should help diversify your portfolio and counterbalance your investment in stocks and other asset classes. To make sure your portfolio is balanced appropriately, you may want to consult an asset allocation calculator based on age. Number 7. Read the prospectus carefully. If you're investing in a bond fund, be sure to study the fees and analyze exactly what types of bonds are in the fund. The name of the fund may only tell part of the story. For example, sometimes government bond funds also include non-government bonds. Number 8. Use a broker who specializes in bonds. If you're purchasing individual bonds, choose a firm that knows the bond market. Number 9. Learn about any fees and commissions. Your broker can help break down the fees associated with your investment. Did you find the information helpful? Let us know in the comments.